Good afternoon and welcome to NYFP. In midday trade on this Thursday, we are seeing the major U.S. stock averages in the red. The Dow continues to trade lower by triple digits. Joining me to weigh in on the market action today is Keith Bliss of Cuttone and Company. Good afternoon, Keith. Thanks for joining me.
Well, it's my pleasure, Remy. Good to be with you.
Well, we are seeing a sea of red on this Thursday, and it does come amid some mixed economic data releases and some misses on earning guidances from Cisco as well as Walmart. But do you think we're seeing the beginning of a correction or not?
Time will tell. It's a little early to say that. We're down 2.5% on the S&P from the high on August 2nd, so that could be the beginnings of it. We've traded through a couple of really strong support levels, which also gives me an indication of that. Plus, we're also picking up some things in some of the quantitative work that we do on the marketplace. Commodities are starting to get stretched, and we're looking for a sell signal on that. We've got some other things going on inside of that work. And then you add in the fact that the economic data was a little mixed, but most people are thinking it's good enough for the Fed to start really pulling back in September. And then, but the counter to that is that Walmart and Cisco just gave us some really bad news on their earnings, and Macy's a couple of days before. So the confluence of all those events is really what's lit this market on fire. So we capitulate in here across a couple of other very strong support levels, and then yes, it could be the start of a 5% correction for sure.
And Keith, you bring up a lot of important points. We're watching a lot of indicators, so not surprisingly, we're seeing the VIX up by 10%. We're also seeing treasuries down and the 10-year yield at a two-year high, so that is a bit concerning. But you mentioned the Fed, so what is your timing for when they could possibly begin tapering?
I've been saying all along, I've been on record as saying I think they're going to do it in the September meeting for a couple of reasons. Number one is that they have learned over time, and you've heard this from a lot of the Fed presidents, some of the non-voting members like Dallas Fed President Fisher, he's been the most vocal one. But they've just grown increasingly concerned about the overall efficacy of this program. They're putting a lot of money out into the marketplace, and it doesn't seem to be helping in the real economy. Sure, it's keeping asset prices elevated, and it's helping the ultra wealthy around the globe. That's where the money seems to be finding. So they're concerned about the efficacy of the program. They're concerned about an ever-expanding Fed balance sheet. They're certainly concerned about inflation longer term. We heard that from St. Louis Fed President Bullard yesterday in his speech. So that's why I think they'll rein it in sooner than, I'm actually in the minority on this. Most people think in November, certainly by the end of 2013. But I think we'll see it in September where they'll start to curtail it. Now, what people need to understand is that just because they're tapering doesn't mean that they're going to exit the bond market altogether. They're going to taper it a little bit, and they're going to reinvest all the proceeds from maturing bonds that they have. So it's going to be a very, very long time before the Fed completely exits. I think we'll see a knee-jerk reaction in September if they announce a tapering, which might be a good buying opportunity if we hit some critical levels on the S&P at the same time.
And we do continue to keep our eyes on Fed comments. Yesterday we saw the market recover from earlier losses as James Bullard started speaking, but those losses continued once we headed into the close. But we do have to keep in mind that we still have another jobs report before we head into the next meeting, so we'll keep our eyes on that. But in terms of other geopolitical concerns, we have Egypt today in the crosshairs, and we've been watching that.
Yes.
And we've been monitoring the latest in terms of activist investor action. Earlier this week we saw Apple move back above the $500 share level, and also Warren Buffett's Berkshire Hathaway did a little bit of rebalancing today in terms of what they're holding. So what is your take on what we've been seeing out from that space?
What was a boring summer suddenly got very active and is boring no longer. I mean, the situation in the Mideast, that's always a cauldron. It's always a hot spot. You know, it'll flare up a little bit higher than normal like we're seeing now. It's an unfortunate situation, but where you're seeing that is really drive the price of oil right now. Crude is rallying on that news. So that will impact a lot of sectors across the board, some positively, but most negatively. The activist investor situation that you're talking about, expect to see more of that as we're at these lofty levels, and you have a few activist hedge funds with still a fair amount of capital and a fair amount of influence to play inside of the market. They're going to be doing what they can to get some sort of return out of their companies, and Carl Icahn and some of the others are famous for going to companies and taking at least a 5% position and then going in and imposing their will upon the companies and asking them to do certain things. I expect to see more in that, but overall, September is typically a very volatile month inside of the marketplace. Most people recognize October as a bad month, but September is typically a worse month than October seasonally. as we enter that period, as people come back from their holidays over the summer, as we get through Labor Day, as we get that jobs report for August, which, by the way, pretends to be a pretty good jobs report based upon what we've seen in the first-time claims, I expect to see the VIX maybe rally all the way back up to 20. We'll see much more volatility in the market, much more volume, and there'll be some interesting times in September and some interesting opportunities both on the long and the short side as a result.